Welcome all the distinguished panelists and audience to participate in our discussion, Entering a SPAC-tacular Era. Hello, I'm Aaron Tsai, founder and chief capitalist of Moss Capital. I'm the moderator. SPAC has gone a long way and officially became a mainstream method for companies to go public in the US. Last year, SPACs had a record year. Yet this year's the number of SPAC mergers has already doubled 2020's 4 years record. The SPAC fever has spread even to Taiwan, while Chinese IPOs in the US are on hold. In September this year, Gogoro, a Taiwanese startup that specializes in battery swapping technology, is in talks to go public through a merger with Poema Global, a 300 million US dollar SPAC with deal value at 2.35 billion US dollars. MaxPro Capital Acquisition, a healthcare SPAC based in Taipei, Taiwan, completed a 90 million US dollar IPO last month. Let's start the discussion with a brief self-introduction of the panelists. Why don't you go first?
Okay, hi everyone, and thank you for the invitation to be here. So I am Leu, and I'm from the Equity Capital Markets team at the Singapore Exchange. Things have been very exciting for us as we just released the SGX spec listing framework a couple of months ago. Just to give a bit of an overview about the spec listing framework and the objective for us to introduce this year. Absolutely, I think specs have been a very hot topic globally, and we've also see a lot of interest, especially in the US market. But at the same time, we also were receiving a number of interests, both from Asian potential sponsors as well as issuers that were interested to consider the spec route as a means of accessing the public markets, which was a key impetus for us to consider releasing the spec listing framework this year. The public consultation was very well received. In fact, it was one of the most robust responses we've ever received for a public consultation. I think further testament to the level of interest in Asian spec listing as well. I think a lot of people do ask or question whether specs will be a fad. And again, I think from SGX's perspective, we do think it's here to stay. I think there are a number of advantages and benefits to the spec product that compare quite well or more favorably for IPO. Doesn't mean that it's going to overtake IPOs, but I think that this can be something that will be complementary and basically offer more alternatives to the market.
Okay, thank you, Larry. Drew, you want to go next?
Sure. I am Drew Bernstein. I am co-managing partner of MBP, part of the Markham Group. We specialize in working with Asian companies that are going public on US exchanges and consulting for companies on other exchanges. That being said, our firm at the Markham Group handles perhaps 300 SPACs of the maybe six or 700 that are out there right now. We're working with a very sizable group of Asian SPAC sponsors, and this is a very sophisticated group of PE funds, hedge funds, and alternative sources that I think realize and understand the potential of the SPAC format as an alternative to the IPO. Now, up until recently, we've seen the initial focus was merging with targets in China, given the scale and given the amount of capital that they needed to fund their business plans of innovation and growth. But given the complexities right now in the China market and the uncertainty, one of the things that we've been seeing lately is a shifting from the China market to the US and Southeast Asia market. I might add also that the SPAC has a 24-month period, so the timing is essential. And given that some of the deals in Southeast Asia are under the billion-dollar market cap, they may be easier to get done.
Okay, thank you, Drew. Mark, next.
Yes, pleasure to meet everybody. So my name is Marcus Young, and I'm the CEO of Seabridge, which is a technology-focused investment and advisory firm based in Singapore and focusing specifically on Southeast Asia. So basically, we have uh, three functions. The first one is advisory for the technology startups in Southeast Asia, helping them fundraise, typically a little bit later stage, Series B and above. We also help them with their exit opportunities, of which SPAC is now an important option for them. The reason why Seabridge was originally set up was to provide exit opportunities for startups so that we could complete the virtuous cycle of capital and bring back some of the capital into the venture capital ecosystem. Um, and we're very excited about the opportunity for doing that through a potential SPAC a structure. Our third uh, business is SPAC focused. We are looking very closely at SPACs both locally on the SGX with Leyu and also um, US SPACs as a sponsor, as a potential sponsor. We've been looking very carefully at trying to get into the market and getting in there at the right time. And so, as a potential sponsor, but also as an advisor to startups who are looking at the SPAC opportunity, we hope that we can educate the market and at the right time with the right company, we would bring some of these target tech companies to either the SGX or the US SPAC market.
Okay, thank you, Marcus. I'm Aaron Sai. I'm a Chinese American entrepreneur and investment banker. Since 1995, I've founded Moz Capital. I have advised over 30 companies in going public in the US. Today, we are focused on advising Chinese and Asian companies in going public in the US via SPAC and IPO, with an office in Shanghai. There is an old Wall Street Journal article dated October 29th, 1999 about me for creating 101 public share companies in the 1990s, long before SPACs became mainstream. Today, I'm also spearheading the blockchain fintech business through MOS5 Financial Public Chain and Hashbrown Swap, world's fastest cross-chain DeFi platform with a next-generation exchange. I also plan to introduce the SPAC concept into the DeFi space through the creation of MOS5 Acquisition Roman numeral 1 Corp. Okay, let's get into the today's discussion topic. Um, how does the SPAC frenzy in the US have an impact in Asia and Southeast Asia? And second question is, have Asia and Southeast Asia too caught the SPAC fever? Third question is, we do see a growing number of Asia-based sponsors are backing SPACs. What can we expect moving forward? Marcus, you want to go first?
Sure. Thank you. It's interesting the word frenzy. I'm not sure whether we're in a frenzy. Maybe Drew can explain that a little bit more closer to the source. I think there was probably a frenzy, as we all know, last year and the beginning of this year. My understanding is that um, in the second quarter of this year, things quietened off a bit, and now at the end of the third quarter, things are beginning to pick up again. I would say that the market seems to have gone through a cycle and some of the exuberance at the beginning of the cycle has now evened out. I think basically it's a rebalancing between um, the various players involved in the SPAC, whether you're a sponsor, or whether you're a target, or whether you're an investor. And there's a rebalancing of interests between all of them. I strongly believe that SPACs will eventually um, come into a structure which is acceptable and a win-win-win situation for the target companies as well as the investors, the long-term investors, not just the short-term ones, as well as the sponsors. And so I think um, this kind of evolution which we've had over the last 6 months, I think, is very good for the market. In terms of Asia specifically, um, the market did come, or SPACs did come to Asia at the beginning of the year, from what I can tell. We've advised on a number of potential SPAC opportunities. We spent a lot of time educating or speaking to target companies, especially tech companies, on the opportunity, and really allowing them to understand a little bit more about what it actually means. There was a lot of interest from our clients, which are technology companies. And so I think most tech companies in Southeast Asia have now spoken to SPACs, or at least learnt about the SPAC opportunity. I would say, however, that not many of the companies have actually moved forward with a specific SPAC at this point in time. And I think that's because SPACs are quite complicated, and to prepare for a SPAC, it takes quite a lot of effort, and they may not be ready to actually de-SPAC at this point in time. But in the future, I think in the next 6 months to 24 months, you will see more and more quality Asian companies who are ready to de-SPAC and merge with a SPAC, whether it's an SGX SPAC or whether it's a US SPAC.
Okay, thank you, Marcus. Drew, do you have anything to add?
Yeah, I mean, in my opinion, I mean, the SPAC has been a very effective structure, and it's here to stay. Um, One of the interesting things about the SPAC is it's a way for the average person to be able to participate in an IPO, which is very alluring. When I grew up, my father was a school teacher. He wasn't going to get an allocation from Goldman Sachs of an IPO. But a SPAC, it had an old name. The old name for a SPAC used to be a blank check company. But before that, it used to be known as what we call a poor man's IPO. Now, the interesting part about it is that, yes, the IPOs from China has dried up during the third quarter. But at the same time, coming out of the second quarter, the investment into the PE funds and venture capital increased. And what that tells me is really two things. One, that there's still a tremendous amount of interest in Chinese companies because they account for virtually half of the unicorns. And it also tells me that there's a substantial inventory of private companies that are looking for capital under the $1 billion mark. So I think that the marketing right now, is very promising. Now, we have seen a significant uptick in deals coming from Southeast Asia. And the average SPAC at this point is about 300 million, which means you're going after a company at least of a billion. And that comes with its own complexities. And given the number of companies in Southeast Asia under the billion mark, it seems kind of attractive for SPACs that, are under that 300 million mark, to be able to go after companies in Southeast Asia. And right now, given the SPAC market, that they've already eaten up probably 6 months of their 24 months, they're looking for quality targets right now. And I think Southeast Asia is a very promising area for them to look.
Thank you, Drew. Lei, do you have anything to add on this
Yeah.
topic?
Okay. So I wanted to say, instead of talking about calling it a fever, uh, I feel that what actually this situation has shown is that there's a confluence of factors that have made SPACs especially attractive to certain companies. And this is because of the way the SPAC product is structured from a more forward-looking perspective, which is especially attractive for new economy and high-growth companies that feel that they would want to make use of this structure to demonstrate their projections. It's a forward-looking model, which is very different from the traditional IPO process, which tends to be on a more historical look-back basis. And this, I think, also coincides very naturally with the rise of new economy companies. If we look in the region, a lot of these startups that maybe were founded about 10 to 15 years ago are now getting to a stage where they are more mature, and then they will start to think about exits and therefore the capital markets as well. This is why we developed the framework. We don't see it as a competition with other exchanges, but we think it's complementary. The pie is big enough. And the Singapore Exchange offers its own value proposition for companies that ultimately still see the benefit of listing here and accessing public market investors here because their business is here and their brand name is known here. Now, the US is truly the deepest market in the world, and the depth is something that no other market globally can beat. But because of that, it is a very deep ocean. You do have to be of a certain size to attract institutional investors and analysts' attention, especially when the time zones are different as well. So would a founder want to stay up past midnight to speak to analysts, or would analysts want to do the same to speak to so many different companies when they have great choices at their doorstep? And when we take this into consideration from diverse aspects of industry feedback, then we felt that this was something that could fill a gap in the capital market. And our pitch to them is also, this doesn't mean that the US is ruled out once and for all. We do encourage you to list. And what we're doing is providing you alternative means to access public capital. This just gives you more options. Whether you want to go through a direct, a traditional IPO route, or would you want to go through a SPAC and leverage on the reputation of a well-known sponsor in the market? But having said that, once you've listed, once you've raised funds and grown to an even bigger size, then why not go to the US then? And because of that, we've also developed a very established framework for secondary listing with NASDAQ, this exclusive partnership, where we actually actively do encourage companies that are listed here to also consider a listing there, and then we can convert the listing here to secondary listing. So all things in good time. I think what we want to emphasize is that do consider the venue that makes the most sense for you.
I would
Thank
add,
you.
Liu, that it's the very early days for the Singapore Stock Exchange,
Oh,
right?
definitely. Yeah, we're learning.
And also you put out like China position papers, which allow various aspects of the industry to comment. So, very hopeful that when Singapore institutes it, they'll be able to plug some of the abuses that exist right now.
You mean for the SPAC framework? Oh, no,
Yeah.
definitely. Yeah, I agree. I think we did look a lot at that, what was happening. And that's why if you look at the SPAC framework that was finally released, we've you can kind of see the focus or differentiation on two aspects that we tried to make it a little bit different from the US. And that's because of what we were seeing were happening where we see some maybe not so quality sponsors kind of joining the fray as well, which is why we do place a lot of emphasis on the quality of the sponsor overall, including track records, and also trying to make it such that the rules do align the interests of the investors with the sponsors. And in fact, if you look at what the SEC has been doing, the announcements that they're making, actually they're going the same direction, which gives us our comfort. I think regulators all over the world are thinking the same way.
Okay, thank you again, Lei. Let's move to the next topic. How tech startups or venture capital firms should tap into the opportunities. How ready are companies in Southeast Asia and Asia for SPAC mergers? Are there any segments, sectors, countries seen as the more popular ones? Marcus, as an investor, do you want to address this?
Yes, I think those are very interesting questions. Uh, I think it's important to start off by saying, specifically on the technology side, that what Drew was saying, and Lei, you also mentioned, um, there aren't that many big companies around in Southeast Asia. That the tech ecosystem is still fairly young. The oldest cohort for consumer-driven tech companies is probably 10 years old. Um, there are a few big unicorns out there, but there's probably about 30 unicorns, but there's probably about 100 unicorns in the market. And I think the opportunity for the unicorns is unicorns meaning the slightly lower than billion, between 100 and $1 billion. That's a really interesting opportunity, and I think SGX has a very good solution for those type of companies, as Lei you mentioned. Um, uh, if you can either be a bigger fish in a smaller pond, or you can be a small fish and an unnoticed fish in a very big pond. And I think the SGX solution, if you're in for the right company, makes a lot of sense. Um, I think it's also important to note that technology companies should not be focusing on SPACs as a way of raising money. Um, it's really an exit first and foremost, and secondly, it's a way of accessing capital markets, public capital markets, in the longer term. But I don't think the SPAC itself should be viewed as a way of raising money. And I think some of the problems you're having in the US in terms of high redemptions rates and pipes, discussions with pipe investors and trying to get the right deal really shows that it's not so much a fundraising mechanism. It's more first you are become listed through the SPAC mechanism, and then afterwards, if you have strong following through the investors, then you can fundraise later on. So a lot of the companies who we speak to, who are tech companies, and they see it as a fundraising exercise. My advice to them is it's there are easier ways of fundraising than this. If you're a good startup, you can fundraise in the private market and the venture capital market much easier without having to expose yourself to the public markets and have all of the problems or the troubles of being a listed company. But if you are interested, if you're ready to exit, or your shareholders are ready to exit, and you're ready to enter the public foray and become a publicly listed company, and that's part of your plan, then I think the SPAC is a fantastic alternative to a traditional IPO. Interesting enough, IPOs haven't been very successful or very strong in as an exit opportunity for tech companies in Southeast Asia until recently. But we've just seen some Indonesian IPOs which are very successful. And I think that shows you that there is strong public market retail investor and local institutional investor demand for local companies, local tech companies. So I think traditionally, as you probably know, tech companies have exited through the trade sale route. But I think going forward, IPOs and SPACs will become a significant part of the exit opportunity for tech companies in Southeast Asia.
Thank you for your view, Marcus. Drew, your firm advised a lot of Chinese deals, but do you think the South Asian companies are ready for SPACs?
Well, let's just let me add a little color to what Marcus said and give you an explanation. First of all, when you refer to small companies, I mean, it wasn't perhaps 8 or 9 years ago when, the term was first used, unicorn, there was probably less than 40 of them. less than 8 years ago. Now, fast forward 7, 8 years, there's over 700 of them, which is enormous. So, a large company to me doesn't really have to be a billion. An $800 million company is still a large company to me, and there's a enormous amount of them in Southeast Asia, which makes the market so interesting. Now, if 2021 was we what we the lessons of 2021 with respect to SPACs is that we learned how easy it was in order to do a SPAC IPO. I think the proof of the pudding and the lesson at the end of the day is going to be how successful they are at de-SPACing. Pulling off a successful de-SPAC. That's the key. And for me, a successful de-SPAC is one where after you de-SPAC and acquire the target, the stock trades up and the company has enough money to execute their business plan. Now, I think that it's going to be an interesting market right now to see what valuations are down there in Southeast Asia and how the market looks at that. But I think that it's certainly going to be an alternative to the IPO because it's incredibly effective right now. And I think it's pretty much here to stay.
No, thank you, Drew. Lei,
I
do
might
you?
add one other thing
Okay.
that about the SPAC that's also very interesting. Marcus mentioned, um, in most of the SPACs, we've experienced at least a 50% redemption. And currently, we're seeing up to 70, 80, and 90% redemption. So, just to put a perspective on the SPAC market, 3, 4 years ago, SPACs used to raise 3, 4, 5, 6 billion a year. In the last 2 years, they've been raising over 100 billion. But let's keep in mind that a substantial amount of that gets redeemed. And in the big picture, the SPAC market raising probably having less than a billion, less than 100 billion, it doesn't compare when you compare it to the VC funds and the investment banks that control $3 trillion. So that even the SPACs have accounted for a majority of the IPOs. So it shows you how effective they've been.
Okay, thank you, Drew. Lei, do you have any additional perspective?
I think Marcus and Drew said it all. But yeah, no, I think that I think the product is evolving. Actually, the specs have been around for a while, but you really saw the interest coming around the last 2 years. And again, I was alluding to how maybe macro economic factors led to this. I think even this structure of allowing redemptions, even if you are not voting for it, I think all these have helped to generate, a significant level of mainstream interest in specs. I also do think that specs are here to stay. It's not a fad because they do address certain issues about the IPO market that I think was an impediment, especially to the high growth and new economy companies that were keen to list. And Marcus, I think you really pinpointed it. The Asian market definitely has more catch up to do in comparison to the US. And this is actually a structure that can help investors to better understand the business, through the sponsor, where the sponsor is kind of putting itself behind the selected target, but by giving them the opportunity to come in earlier in the process, together with the institutional investors. And also, of course, the price, a bit of more of a price certainty, a bit more of a valuation certainty, although, of course, that remains to be seen depending on, the actual de-SPAC process. But what all this have come together is that I do think that this is something that will remain attractive, to investors, especially those who are keen to list. And I think even this structure of allowing redemptions will remain attractive and in consideration. It doesn't mean that IPOs are gone for good. There are companies that we've spoken to, and they were interested in SPACs at first, and after a while, they said no. Maybe actually, after talking to different people in the market, we believe that the IPO process is better for us. They want more of a price discovery process. They want more profiling and publicity, and I think an IPO really does help to achieve that. So it's not whether one is going to be better than the other. But that there will be interest always in either option. And I think what's very important from the exchange is to just try to ensure that whichever you choose, it can be as efficient and as seamless as possible. I mean, that's what the platform can provide for the market. In terms of the investors, again, also you're right. Like Marcus said, the investors do have to learn. It will be a learning journey, which is why we're also putting a lot of efforts into investor education, which is expected given that it is a new product. But we, from the level of interest that we've seen from the market, we do think that this will be something that will take off. We've seen healthy interest. Again, nothing like the US, but we don't want to be like the US at this point. This is, so new to us. But what we want to focus on is to bring in quality sponsors and make sure that, the journey for them is something that will be a fulfilling and one with a good outcome at the end.
Thank you,
You
Lei.
know, one of the points you raised, Liu, was a very interesting point about the SPAC. And it's one of the attractiveness about it for a company, choosing between a SPAC and an IPO. In an IPO, a company subjects itself to market risk, right? In a SPAC, they're getting paid a price up front, so they know exactly what it is.
Yep.
That's very
That's
reassuring to a lot of companies. So that's just one of
Yep.
the aspects of a SPAC that actually make it very attractive to companies.
Yep. No, I absolutely
I thought
agree
that
with
was
you,
a very
and
good
that
point.
is great attraction. Yep.
Yeah, I also agree with Lei that SPAC is here to stay, but there may be increased regulation, and also the business model may evolve uh, for to align the interests of the sponsor, the management, the target company, and the investors. Okay, let's move to next question. That's mainly for Marcus and Drew. Any challenges or issues to take note of during the de-SPAC transactions? What are the risks and how to better manage these risks? Marcus?
Sure. So I think the best way is to break it up into the three stages. There's the pre-DSPAC, there's the DSPAC itself, and there's the post-DSPAC. And I think each of these stages will have a slightly different challenges. Um, I'm talking from a Southeast Asian technology company perspective, and these companies are typically quite young. Um, Indonesia is a big market, Vietnam, Philippines, and then you have Singapore, of course. But each of these tech companies have only been around for a few years. And I think preparing themselves to become a public company readiness is probably the biggest challenge for any Southeast Asian technology company. Um, Typically, these DSPAC processes are quite intensive, and trying to get yourself ready. Let's say you receive a term sheet, and within 6 months you're going to be a public company. That's a huge challenge for most companies, even companies like Grab, who is rumored to become vying for the number one SPAC, biggest SPAC ever globally. It's a big company, but they're also obviously taking their time to get it exactly right before they actually de-SPAC. So I think trying to prepare yourself to become a public company, and then making sure that all of your internal processes in terms of having a dedicated CFO who knows about listed companies, and having a IR department who can actually put together the reporting requirements, which is necessarily, I think that's going to be a huge challenge for a lot of the companies. It will take them time to do it. Also, there's some auditing requirements, especially in the US. I know SGX doesn't have that, but in the US, you need to have certain PC, I think it's called PCAOB audited requirements, which is quite a big challenge for some of the Southeast Asian companies. So it is quite challenging to prepare for the SPAC, and then during the DSPAC itself, understanding how it works. It's quite a complicated process, um, and the structure, and then you've got redemption, you've got warrants, you've got um, your dilution, and you've got sponsor uh, um, dilution, and you've got all sorts of other things. And for an ordinary company trying to get their head around this, I think is quite challenging. Um, and then finally, the most important thing is once they are listed, or they've gone through the DSPAC process, what about their share price? How can they continue to make sure that the share price appreciates over time? The DSPAC is just the start; it's not the end. And so that's something which I don't think many of the technology companies have really even fathomed how to make sure that their investment story can ensure that the long-term share price goes up. So I think there's a lot of challenges to um, going public. It's much easier actually to stay private if you wanted to fundraise. But if you're ready and if you think you have a great story, then the rewards can overcome these challenges.
Thank you, Marcus. Drew, you help a lot of company risk associated with this spec. What are your review on it?
Well, I would echo a lot of things that Marcus said. Certainly, the company being able to have a strong financial department, having an IR department, good professionals, that's essential. Something that I repeat to all of my clients, that if you want to be a successful public company, regardless of the exchange you're on, you need to own 80% of your investors' trust and confidence at the end of the day. You have to. And if you can do that and you have a good business plan and you're able to execute it, well, then you have the start of a good company. Um, I would say that, the SPACs, there's this misconception, I think, that there are lighter requirements for a SPAC. And in essence, I think in some respects, the SPACs give the investors actually a longer runway because they're actually able to publish um, projections and estimates of what they expect to do, whereas IPOs cannot do that because they'd essentially be setting up the IPO. So for investors in the SPAC deal, there's essence where they actually have more information available than people doing an IPO. Now it's funny you mentioned about you talked about CFOs. Normally, when a company goes public in the US, that's the first person they hire. In Asia, that's usually the last person they hire, a couple of days before they go public. So, having financials that investors can believe and trust in is essential. And the other thing I would add, perhaps the most effective way to de risk a SPAC is during the de-SPAC phase. And that's acquiring, a quality target. And also, most importantly, having the pipe money lined up because the pipe market has done a lot to validate the SPAC market. As I mentioned prior, at least 50% of the SPAC money is redeemed. And the balance of the purchase price is taken up by the pipe market, which is essentially the institutional investors. So having the pipe market aligned in your transaction goes a long way to de-risking the entire transaction.
Okay, thank you, Drew. What percentage of the D-SPAC transaction has pipe transaction being lined up as far as you know?
Can you repeat the question, Aaron?
How many D-SPAC transaction has pipe lined up to help complete the D-SPAC process uh, in
Well, I
terms of
don't know the exact number, but in virtually every single SPAC, you have the pipe market right behind it. The average SPAC today is about 300 million, and a $300 million SPAC is positioned to acquire roughly $1 billion company. Southeast Asia is well positioned with companies under a billion. And I actually think those are the easier transactions to execute because the market right now is looking for companies that are not only a good business, but also are ready because they've already eaten up to 6 months of their 24 months. So um, there's a timing problem right now. And I think some of these smaller transactions will be easier to execute.
I see. Drew, for the pipe underwriters, do you see the spec underwriter help do the pipe placement, or is done usually companies hire a different broker dealer to do the pipe transaction?
Marcus might be better able to answer that, but we're seeing basically the first option.
I see.
Most of the companies, especially in Asia, they know some of the Hong Kong, Singapore, Taiwan markets. They don't know the US investment banking world as well. So I think that they basically look for them to bring along the pipe market.
I see. Okay. Marcus, Lei, you guys have anything else to add? Lei, you're on mute. You're on mute.
Oh, sorry. I think it automatically went muted. But okay. Anyway, I was just saying that the situation here is still new for us. I think it's definitely a bit of a learning process. From our initial conversations with the bankers, while we've seen interest, we do anticipate the investor mix to be a little bit different from the US, where I think you see a lot of participation from the hedge funds at the SPAC process, and then the institutional or retail investors come in later. So we do think there's probably going to be a different mix. I think we're likely to see a bit more participation from the private banks, for instance, some of the family offices and the wealth management arms here. But again, I think this is new. What we are hoping is to maybe get a couple out before the end of the year. So stay tuned.
I'm rooting
I
for
guess
you.
that's where we'll see.
Actually,
Thank you. I'm rooting for
I had
you.
a quick
The
question for
usual
Lei,
thing.
if that's okay. As Drew correctly mentioned, there's quite a lot of opportunity for some of the smaller sub-unicorn companies. But one of the key concerns I thought in the US stock market was that if you're less than $1 billion of market cap, then you would become an orphaned stock, and there just wouldn't be enough interest or
Yeah.
coverage.
Yeah.
In this, if you're a smaller company, or let's say a $500 million company on the SGX, do you think there would be significant interest in those size of companies?
Yes, absolutely. And first, I'll caveat. I think that you see great successes in the US, and then it's hard to kind of just say that, oh, at a certain market cap, like you won't do well. But I think what does bear testament is the fact that in general, smaller size companies, and again, this is just because the US is so huge that $1 billion is considered like a micro cap there. It is very hard to get analyst attention unless you truly stand out. And this is where we think that SGX does have a differentiating advantage. And again, that's I think Marcus, you yourself said it right. Be a bigger fish in a smaller pond. The fact is that we do know that there is analyst coverage here. A lot of the technology companies in Indonesia, Thailand, Singapore as well. These digital technology companies have received good coverage, and because again of the time zone similarities, whatever they do, whatever announcements they make, are immediately replicated across the market. It is something that has a lot of a multiplier effect in the region. This is why we do think that it is a good opportunity for them to consider fundraising here, making sure that they get a good base of Asian investors who understand them well. And then eventually, when you're of size, and we suggest that you may consider getting past the 1 to 2 billion mark, then go to the US and fly the Asia flag
Yeah, I
there
think
for
one of
us.
the problems for the smaller companies, at least within the US, you're talking about multi-billion-dollar funds here. And a $300 million investment, the problem is it doesn't really move the dial on a multi-billion-dollar fund. And I think with some of the smaller investment banks
Yeah.
and hedge funds in Southeast Asia, that could be an enormous opportunity because you have to be a $600 or $700 million firm before you become a unicorn. And as you mentioned, one of the advantages in Southeast Asia and Asia is that people understand the business practices, they understand the risks of a government running an economy rather than the principles of supply and demand. And there's almost 700 million people that live just between Malaysia and Indonesia. So I think that there's enormous opportunities for people to invest in some of these smaller companies that eventually will grow into unicorns.
Yeah, no, I absolutely agree that, and this is where we will,
Okay.
No,
welcome Drew to
look,
Singapore to do more
we're
here.
opening an office there shortly, and I think it's a very
Oh,
promising region.
great!
Okay. I want to
You
thank.
know, it also
It's great
one of the
news.
advantages of Southeast Asia as compared to China is it doesn't come with a lot of the regulatory issues and inspection issues, right? Common language. So there's a lot of good things that I think are going to come from there. And we're very excited at Markham right now.
Okay. I want to thank Leyu, Drew, and Marcus for sharing your valuable view and insights, and during our spectacular era panel. Uh, you're
Thanks, everyone,
welcome.
for hosting it.
Thank you, everybody. It's a
Thank you,
pleasure.
Aaron.
You're welcome.